The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Okay, good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, fighting a few technical difficulties this morning, but we'll get through it. The market this morning, negative by about 10 points as we kick it off. Quite the day yesterday. Chairman Powell, we got some earnings from Qualcomm last night after the bell, sending Qualcomm lower. You send Apple lower as well. This morning, we have Christine Lagarde speaking as we're talking right now. We have some action in the dollar index. We got some action in gold. We got some action in crude, action everywhere. And we got Apple earnings after the bell tonight. We have jobless claims today. We have non-farm payrolls tomorrow. Do we have enough going on in this market? And we pick things up in negative territory with the NASDAQ negative by 6 right now, the Dow negative by 63, the Russell negative by 12. How about last night, man? Pretty interesting. You have to know Chairman Powell knew something about this, right? So he's having the press conference the whole time, man. The news breaks that PacWest, they might be selling. They might have to sell, right? And we've been talking about it, man. Who's in the equity, right? Yesterday, I think I was talking about it, saying the equity was still valued at something like $800 million for a company. Folks, it's not easy to create billion-dollar companies, okay? Yeah, today you're down to 458 as you're trading at $3.80 right now. And that's off the low of 256. Banks getting hit in a big way. Some of the others as well. You jump over to some of the bigger banks. JP Morgan traded down a bit. We're back. Bank of America. You saw the sell-off into the close yesterday, and they traded lower as well. But not too dramatic as we are overnight. You jump to some of the stocks that had action. How about Apple, man? Apple, folks, I've talked about it. 16 billion shares outstanding. In this equity from the highs yesterday to the spike we got, you don't even have to go to the spike, right? You have basically $6 of real action from where we were at the highs yesterday to where we are right now. Now, this is Qualcomm after the bell as well. Okay, we'll get into that later in the program. But you got Apple spiking from 171 almost. We're at 165. That is $6, folks. That is approximately approaching $100 billion in market cap wiped out just from yesterday. You get some Apple weakness in this market, man. Watch out. Okay, you just traded up almost $50 from the lows. Folks, I just told you, you got 16 billion shares outstanding. That's $800 billion in market cap that's been added from the beginning of the year. I think the S&P in total has added something like $2.4 to $2.5 trillion in market cap, which has accounted for the run that it's had. When you look at the S&P, there's been a lot of talk about really, we have all known how big of a player the big FANG stocks are in the market, but they just keep getting bigger because their companies just keep getting bigger, and they have an outsized influence in the S&P. So you have the S&P trade up from 3850 to 4200. You have it trade up about 350 points. What is that? 7%, 8%, 9%, something. It was approaching at the highs from the year. Point being, Apple is a third of that alone. You add in Microsoft, NVIDIA, Tesla, Google, the usual suspects. I'm missing a couple, I think, in there as well. Maybe Netflix. No, Meta. Meta's definitely in there. You add in those companies, you get it all. But Apple alone, okay, seeing the hit on Apple last night, after we see the volatility yesterday, Apple's down $2.50. You're well off the lows. You jump over to Qualcomm shares ended at 112.83. You were pushing an area of resistance, support, you could say, on this equity. We're going to open at 104 and change, folks. The lows from the beginning of the year are 106 and change. You're going to be pushing the lows of 2 earnings ago of about 101.93, and to see how low we went, 103.54. We're sitting at 104.60. And as I mentioned, we'll get into those earnings a little bit later. I think I have an article pulled up. As we do, we're going to talk to our man, of course, Kevin Hincks. We got to jump over to the dollar index, though. You talk about some action, man. Dollar index, the euro craters, the dollar spikes. We get up 101.15 in terms of where we are. And I'm going to jump to the headlines. Just give me 1 second, folks. Thought I had it up. I got a lot of articles up. Well, let's talk a little bit of Pac West before we jump over to our man Kevin Hincks coming up after this first break. So you have the chairman talking from 2:30 until just after 3 o'clock in terms of the time. And then at 4 o'clock, you get this news. I mean, remarkable that we have a Fed hiking on the heels of the second largest banking collapse over the weekend ever. And it is not normal times, folks, that you have the Fed hiking. He finishes his press conference after 3 p.m. Eastern time, and within an hour, we're finding out that another bank is weighing their strategic options, including a possible sale, because guess what? They've put aside a previous effort to raise capital. A breakup is one idea considered by the advisors that they have on board. I'm sure Wall Street's reaping some benefits in terms of fees here. We got the dollar index actually giving it up. Maybe the Lagarde is saying something as she's speaking there, but they give it up just a bit in terms of where we are. You're back to 101.3. But yeah, it's especially interesting in light of everything that keeps getting said with the Fed, right? In terms of the strength of the banking sector. And I was saying on the show yesterday, folks, okay? Be smart enough to know you don't know everything to a certain degree, right? When you see these equities collapsing, maybe it was on Tuesday's program. I think it might have been Wednesday, though. You know, there might be something going on there that you don't know. And that was confirmed last night, okay? Remember what happened during the banking crisis in terms of during the banking crisis. We're in it. Remember what happened in terms of Credit Suisse and UBS, right? All they were doing was buying some time for Credit Suisse, folks, when they gave them a lifeline. They already knew the writing was on the wall. That might be the same with some of these banks. Stay tuned, folks. We'll come back with the man Kevin Hincks from TD Ameritrade Network. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&P futures negative by about 13 points right now. That's about 0.3% in the red, trading at 4,095. Let's jump over to our man Kevin Hincks from TD Ameritrade Network. Folks, every trading day, 12 noon Eastern time, right here on Tiger TV, Fast Market, with your host, Kevin Hincks, Tom White, the whole team at TD Ameritrade Network. And let's just jump right into it. Kevin Hincks, it's been quite a 24 hours since we talked to you yesterday, man. Good morning.
Good morning, Tommy. I think, this market is trying to consume and digest all the information they got not only yesterday afternoon, but this morning from the European central banks. So there's two things going on. If you look at the dollar and the euro, the dollar went from down to up. The euro went from up to down. That's because Christine Lagarde only raised their benchmark by 25 basis points. I think the world was looking for a little more than that. So you've got that, and you've got Jerome Powell yesterday, who basically, Tommy, I believe, gave you your hawkish pause. And it's not what was in his comments that was important, but it was what he took out of his comments. The phrase sufficiently restrictive, the fact that he removed that from his comments, he basically is telling the street that now he's data dependent and he's ready to pause as long as the data shows up. As long as core PCE, which he mentioned in his comments, starts to come down, as long as JOLTS, which he mentioned in his comments, keep moving lower. He mentioned that you can have a recovery without the inflation rate going significantly higher. If those JOLTS numbers keep coming down, that's a good sign for the economy. So Jerome Powell had a lot to discuss. He had to discuss the banks, obviously. So there was a lot on his ticket yesterday, but I think, Tommy, this market just got its hawkish pause.
Yeah, it was quite you had the statement and the verbiage you talked about. There was definitely some changing of the verbiage, some important changing in terms of what they're talking about in terms of their rates going forward. Then you had the press conference, market chopping around a bit, and we got another press conference, like you're saying, with Lagarde this morning as the market digesting that. So they give themselves the room, Kevin, and it sounded like he was really, I think he some of the words he used, like it was an important change. He was calling the change he made in the words himself. It was an important distinction. What they had done was important. That language, the change that they made, he was reiterating, it was an important change that we made. But like you said, the data has to line up. Can I ask you if you think the data is going to line up in the next couple of months? Because that's the real question, right? It's like, okay, we've seen the writing on the wall. The economy's weakening, man, for sure. But inflation's still well above 2%.
Yep.
What do you think has to happen for those numbers to kind of line up maybe over the next couple months? Because we've seen how volatile some of those numbers can be.
Yeah, well, here's the good news. Jerome Powell feels that the Fed funds rate is now at a restrictive level, right? At between 5 and 5.25%. The question is, does that do the job on inflation? And so here, for your viewers, they have to understand, no one's ever going to say the word pause. It's never going to come up in discussions. Jerome Powell said yesterday there was no decision on pause made today. They're never going to announce that. They didn't announce it in 2006. They're probably not going to announce it now. They're not going to guide that way, but they will come out, look at the data, and not do anything at the next rate. I mean, the probabilities are very high for no change at the next meeting because Jerome Powell, in a way, said that. He's got the target rate to where he wants it. So now it's up to the data. It's up to the government to stop spending. It's up to other people other than Jerome Powell. He's done his job. He's got the Fed funds rate to a restrictive area. Now it's got to work on inflation.
It's interesting market action. I agree with basically everything you're saying, man. What's so cool about it is that you have the market comes into Fed week pushing highs, right? 42.06. We get quite a change in the verbiage that we've been waiting for a year, or, as we've been in this hiking cycle for 14 months, where finally they're saying, we may not have to hike any further. We'll see if they line up. And what does the market do, though, Kevin? It sells off. And, man, we got some numbers from QCOM last night, right? Apple, which has been leading this market, down pretty dramatically. So as you mentioned, now it becomes about the numbers. What do you think of the market selling off when I agree that the market really kind of agreed with you, as in that was quite a distinction. We raised by a quarter point, and then the market sells off. Is this the transition, Kevin, that the market's now worried about the growth scenario that we go forward?
I think there's a, buy the rumors, sell the news. I think some of the earnings are coming in not as great. The bar is pretty high for some of these earnings. Look at Apple's chart, Tommy, from the first of the year. I mean,
amazing.
124 it was trading. So amazing. Not really surprising that they may be taking a little bit of altitude out of some of these tech stocks that just aren't able yet, like AMD, like Starbucks, to guide stronger yet. So, yeah, I think the chip sector, which is such a big part of this economy, isn't ready to recover just yet. They're all hinting at it, but it's not showing up in any of the numbers or the guidance, Tommy.
Yeah, and Apple, man, I was talking about it. So 124.17, and we just pushed over 170. You're almost talking about a $50 run. They got 16 billion shares outstanding, Kevin. What is that? $800 billion in market cap alone Apple has added in about 4 months, which is just bonkers numbers in any other universe. With that in mind, Kevin, I talked about it. We got some Apple numbers that are coming up. What are you guys talking about on Fast Market at 12 today, man?
Obviously, we're talking about Apple in a big segment today. We'll also talk about Shopify, and we'll talk about Block, the old Square.
3 good companies in the press, man. What do you think about Shopify? Give us a little teaser. Quite a pop for Shopify this morning to $54.
Yeah,
the stock's gotten hammered.
They're showing the strength of the U.S. consumer, Tommy. So I think they're a company that has to show that the growth is not decelerating, right? All these growth companies, they need to show that growth is not decelerating.
And they are, we use Shopify, folks, for TFNN. They're a great platform. The stock got a little bit ahead of itself, like many others during the pandemic. Accelerated to 176, quite a chart, down to $23 today. They're popping though, and I'll be watching at 12 o'clock today, Kevin. Can't wait to see the program as always. I appreciate the time on quite a morning, and we're not going to talk to you till Tuesday, man. So have a great day. Have a great weekend. We'll talk to you Tuesday. We'll be watching at 12 o'clock today, man.
Thanks for having me on, Tommy.
Always a pleasure. Folks, tune in every trading day, 12 o'clock. We're very fortunate to have that program, Fast Market. Our man Kevin Hincks, Tom White. It's an outstanding program, folks, and this is the time to check it out because, boy, we got some volatility, man, across the board for a fast market, as they say. Excuse me. And yeah, Shopify, you talk about some numbers, man. They got layoffs for the second time. They're also selling their logistics business, right? What does the market love right now? The market loves focus on what you're doing well, pay your costs, sell off what you don't need. That's what the market likes right now, man. You got a pop of almost, 17%, 15%, something like that on this equity right now, up to $54. The one thing I will say, you pull up that chart, boy, that was a fall from grace, man. We're still only talking about $54 on Shopify. That's the high that we had on January. So you're going to be coming into that area in January. And at a time when you got a market at pretty lofty levels, folks, okay? You don't have to be a master technician to look to this area of 4,200 and see extreme resistance. And I've been talking about it before. Boy, the irony of where do we sell off from? We sell off from right where the market was when we began the hiking cycle. How does that work, right? 14 months later. Stay tuned, folks. We'll come back for the open.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and technique to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. You're looking at S&P down about 12 points right now. The NASDAQ negative by 18. Dow off 77. Russell just leading the way, continuing, man. Russell down another 0.75% right now. You know, it is interesting, folks, when you look at yields in terms of where we are right now. I'm going to jump over to an article about Warren Buffett that I was reading about the Journal last night. Just crazy numbers that he's talking about that he makes with dividends alone. Some of the companies, I mean, you may be familiar with it, right? In terms of the companies he gets into. Staggering numbers with the dividends. Now, they come with risks when they're a dividend, okay? A company can always change that dividend, but some of the ones he's plowed into are pretty amazing. But it ties back to the risk-free rate that you have going on right now. Folks, a 2-year ladder right now, today, a 2-year ladder is yielding you over 5%. A 5-year ladder is yielding you 4.75%. Okay? Those numbers, here, hold on. I'm gonna pull them up real quickly. Like that. There we go. Copy this right there. Let me see if I can open this real quick. Perfect. Okay. So this is what I'm looking at here, okay? Let me see if I can blow it up real quick. There we go. Perfect. Check out these numbers, folks. Okay? Staggering numbers in terms of the guaranteed risk-free rate of return that you're getting right now. This is going to be pressure on the market going forward. So we're sitting at 4,200. We have the Fed potentially pausing. We have the market sitting at a pretty lofty level for the year. You have Apple contributing 1 out of every 3 S&P points almost that we've gained this year. So keep your eye on Apple, no matter what you're talking about with the market. And you have risk-free rates of return of almost 5% over a 5-year period. So, you know, if you don't see that, you wouldn't know that. Because when you look at, like right now, let's look at where yields are right now in terms of treasury yields, up and down. To pull those off, they vary widely, which is my point, folks, okay? So be aware of this distinction going on right now. What do you got? You got the 5-year treasury yield at 3.35%. Meanwhile, you put it in a CD, you're earning 4.75%, man. 2 years at 3.86, you're above 5% right now on a CD, okay? So there's some lofty levels out there, and that is going to weigh on the market forever. Now, Mr. Buffett. Let's talk about Mr. Buffett because, boy, these are some staggering numbers, man. Goes to show you what you can do in terms of getting in at the right price and getting in for a solid company that pays dividends. He's been betting big on oil. It's time to find... Oh, is that the one? No, this isn't even the one. Is this the one? Here we go. Yeah, here we go. Okay, that's a different article. The Journal's all about Buffett, and they are because this weekend he's got his big investor share conference or whatever it is. So he'll be speaking on Saturday, I think. So we got a couple here. This is the one I wanted to talk about, okay? Yeah, written yesterday morning. I read it last night. They're going to generate, Berkshire Hathaway, $5.7 billion in cash this year in dividends alone. Now, man, he took a lot of heat when he was getting lapped during the pandemic by the stocks like ARK, right? But pretty remarkable how he caught up in like a year or two afterwards, right? You think about how much less volatility you have with a company like Berkshire Hathaway, and you didn't even really forego any profits because he caught up with the likes of ARK when everything else got decimated. Now, I wanted to just get in some of the numbers, which are staggering when you look at what he paid for these companies, when he paid it, and now how much they're churning off in value and dividends, because it really speaks to you about what you can do over 20 to 30 years, folks. Some of these are 30. We talked 1994, I think. Okay. So first they talk about they're huge in Chevron, okay? They're nearly a fifth of that money, $1 billion, is going to come from Chevron alone. Chevron has increased their dividend for 36 consecutive years. They're going to collect $700 million from Coke and Bank of America. Looks like Bank of America is above $800 million, right? More than $500 million from Kraft Heinz and $363 million from American Express. The company has $128.6 billion in cash and cash equivalents. If you're looking to ride out a storm, folks, this is probably a pretty good spot. Doesn't mean you're not going to get hit, okay? I'm going down here. Okay, here we go. So, his Coca-Cola stake. He bought that stake 30 years ago, 29 to be exact. In 1994, he has not added a single share since. That's crazy in its own right, okay? He bought it for 400 million shares for $1.3 billion at the time. That year, they got a $75 million kickback right away. That's still what is that? That's quite a dividend yield that year alone in terms of what you're getting back for $1.3 billion. What was that, 5%, 6%, something like that? In terms of what your dividend yield was, year one? Well, guess what, folks? This year alone, last year, $704 million in dividends, and the position is valued at $25 billion. Now, it's 30 years, okay? And the S&P over that time, let's take a look at it for full disclosure of what the market can do over 30 years, let alone anybody, okay? The market was sitting at 465 at that point. Yeah, it hasn't even went up tenfold. Now I say hasn't even went up tenfold, but boy, you had quite a years of stagnated growth there because you were at 665. You only went up 200. You only went up 33% from 1994 to 2008. Look at that, right? That's one of the staggering ones when you look at where you can get caught. That's what you should keep your spikes up in your back for, folks. Okay. You know, you got 10 or 15 years left that you need money for. Be careful. Because what if we're at this point in the market cycle, right? That's just something to be aware of. But nonetheless, so he buys all that Coca-Cola in 1994. He buys it for $1.3 billion. It's now worth $25 billion. But how about churning off $700 million every single year just in dividends, let alone the value? And he did it again and again. It completed a bulk of the purchases for American Express in 1995 for $1.3 billion and received $41 million that year, but they're getting $302 million in that position alone this year. Just staggering when you look at the numbers that they put together. Now, Coca-Cola stock was at $64. That's almost pushing highs. He bought it for 10 to 12 in 1994, but we just looked at, right? What happened? The S&P went up like tenfold. Well, he has not invested his dividends in a lot of these, and that's one of the things that they actually say you could have made more. Berkshire didn't choose to reinvest the dividends it received from Coke and American Express back into those stocks. That's one way that many investors end up raising their returns. Well, you say that, okay? And you have to take out the dividends as well. But the market was up tenfold, and Coca-Cola just went up 6 to 7-fold. So he's taking the dividends out. He's doing other things with it. He's got $120 billion in there. But pretty staggering numbers when you look at it. He loads up a position. And the one thing else he says is that you don't chase. Let me see. There's one line in here. Here we go. We'll end with this one. For the investor, okay, in terms of why he hasn't added more, a too high purchase price for the stock of an excellent company can undo the effects of a subsequent decade of favorable business developments. Timing can be everything, man. So don't chase those stocks at highs, as we say that. Market relatively close to highs, all things considered. Stay tuned, folks. We'll be right back in 3 minutes.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Jumping back to a short-term time frame, we got markets selling off a bit, man. We're coming right into the lows of last night. Market off 25 points right now on the S&Ps. You get the NASDAQ, really the strongest of the indices right now, only down about 0.3%. Dow off 0.6%. The Russell, 1.5%. Is PacWest halted, they're saying, potentially in the den? Yeah, it looks to be. No, it's chopping around right now. All right, so they're just, that's probably one of the trading halts. right? No? Yeah, it's chopping around. So you're down 46%. I'm sure there's trading curbs that are getting put in place as that thing escalates right through them. Yeah, pretty remarkable, man. You jump over to Apple shares. Down 1.6% right now. Let's see how some of the other FANG stocks. Microsoft up about 0.3% right now. Amazon shares, it's interesting how Amazon's trading, man. You're getting days where the market's getting decimated, and Amazon is catching a bid up by 1.4%. Disney trading lower by 2.3%. Paramount had their numbers down 21% for Paramount, man. And yeah, pulling up these numbers for Paramount. Post-earnings loss of 1.7 on a $1.7 billion charge, and they cut the dividends. Charges are tied to a plan to remove certain programming as the media company combines streaming platforms. Yeah, when this is all coming together, one of the films that they had, I forget whether it was a Batman film, it was some film, and they basically had it completed, and they decided to stop completion because they could take a huge write-off for it, and it wasn't part of where they're going. I think that's it. No, it might have been Warner Brothers Discovery, but all the companies are dealing with this as they trim their costs. They're taking the charges that allow them to take some of the write-offs that are losses as they come. Yeah, for the first 3 months, $1.12 billion or $1.74 a share. That includes programming charges, which Paramount said are tied to contract termination costs, development costs sunk into abandoned projects, and other impairment charges related. So you strip those out, and the company said adjusted earnings from continuing operations came to 9 cents a share. You got to love how they do that, right? Wow, this is just a one-time loss of $1.something billion. Forget about those, and we actually made 9 cents a share. That's quite a way to spin that they're losing a tremendous amount of money as they are transitioning, right, to a leaner model as they try and compete going forward. The core TV business revenue fell 8%, $5.19 billion, dragged down by the softness in the advertising market. Film business fell 6%. Tough numbers out there. And Paramount down about 22%, and that's probably weighing on some of the streamers as we see this market trading off. Let's see how the dollar index is doing right now. Dollar index 101.50 right now. Gold contract's been having quite a ride. You heard the ad for the gold report over the break, folks. Great time to try out my dad's gold report. He's got new issues out every Monday. He's got a few positions already in there. And I imagine you're going to get some volatility, man, in gold as we see. You have the ECB out. You have Lagarde out today, right? We have the euro cratering a bit. Yeah, and back down right near the lows, man. 110 almost on the euro right now. We were just at 111 coming into that number potentially. And the euro, they're going to slow things down. And so maybe it might not be as dire for the dollar. And we've been bringing up that, hey, you know, this dollar index, man, it's already priced in a lot, okay? You look at this chart, we're still on a hiking cycle. And the dollars went from 115 to 101. Well, there's something priced in, man, okay? So don't think, as Kevin was saying, you buy the rumor, you sell the news, right? I keep bringing it up, folks, because, you know, when we started getting hikes is actually when the market caught its first pop to above 4,600, okay? And then it traded down almost 1,000 points. Well, when we get our last hike, what's going to happen? It would be ironic that we are sitting 14 months later. I mean, imagine this, okay? Imagine this, that you back it up to March of 2022. The S&Ps are sitting at about 4,200. The market is aware that the Fed is going to begin hiking to control inflation, which has gotten out of control. And what if I told you at that time that 14 months from now, right, what's going to happen? We're still going to be hiking. And we're going to have banks failing. And we're going to have an economy weakening. And we're going to have potential war still existing between Russia and Ukraine. Now, crude prices are at, what, $66? That's going to be helpful. But what if I told you all those things 14 months later, right? And I'd say, where do you think the S&P is going to be? We're at 4,200 today. They're going to be hiking for 14 straight months. They're going to be putting out of business banks that have hundreds of billions of dollars in the process. They're going to be failing as they're still hiking. Say, where's the S&P going to be? I said, it's probably going to be lower. I said, no, it's going to be exactly at 4,200. We're going to be hiking in May of 2023. We're going to be above 5%. Banks are going to be failing. The economy's weakening. Inflation's persisting. And we're still at 4,200 in the S&P. I said, man, that's remarkable. It is remarkable. So maybe we deserve to be a little bit lower in the S&P, man, because very difficult to imagine Chairman Powell actually used the word. I'm going to have to get the transcript and pull it up because I'll search and find the word hope. Because he used the word hope yesterday when they were talking about a recession. And it made me think of the conversation with Teddy Kegstadt yesterday. No wishing, no hoping, no praying. And that's a great phrase. And in the market, that is, okay? You can wish, hope, and pray. And wishing, hoping, praying, man, it's a great deal. But if that's your trading strategy, you probably shouldn't be trading. And he literally said, like, I don't imagine a recession, right? They were looking for slowing growth. There was that part of the conversation, if you listen to the press conference, okay, where he was talking about what he thought a recession likelihood was and what it looked like. And he said something like, I don't think it's going to be a recession, and if it is, I hope it's a small one. I said, what do you mean if it is, you hope it's a small one? Of course everybody hope it's a small one. So for what it's worth, S&P is down another 32 points right now, man. We just wiped out 3% this week, folks, from where we started at 4,200. Things move that quickly. And keep your eye on Apple, man. Because if you start seeing Apple lose some steam, okay, I mean, you're down 1.8% today, folks, but Apple sold off yesterday from that press conference sold off about $3. It was down almost 2% from where it was at 2:30, and now it's off 1.8%. And we're going to talk about the Qualcomm earnings when we come back from the next break for the final part of the show, because that is impacting Apple today when you talk about phones, and everything is impacting Apple because it's been so lofty, I would say, okay? You back things up this month, and I wanted to jump to Apple. And, I mean, basically what you had here almost was an A to B, C to D that could have been really close to getting completed, all right? And maybe the completion jumps up one more time, because the completion would have been almost to 176, the highs that we had August is that? Yeah, August. Your A points, 125, we'll call it. Your B points, 155. That's 30 points. You trade back to 145. That's your C point, and we would have gotten to 175. Well, you made it to 171 in terms of where you were. Almost a 30 point, right? 30 point A to B. You pull back. All right, let's just see even. Is that a 382? Like to the penny, a 382. Check it out, right? A to B, 382 pullback. You trade up and you miss it. Now, the reason why I mention that, folks, is because, number one, you got 30-point trading ranges everywhere in Apple. And I just showed you how a 382 is really simple to make. And if you get a 382 in Apple, you're down another $11 in this equity, man. And if you're down another $11 in this equity, okay, that is about $180 billion in market cap. Yeah, watch out. S&P's off 27. Stay tuned, folks. We'll talk a little bit of Qualcomm when we get back. Stay tuned.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the opening call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. I got a chart of Apple up here, and again, I'm repeatedly talking about it because if you trade in the market, anything, it's so important right now. Apple with their earnings tonight, okay? You jump over to the Analyze tab on the Thinkorswim platform. They've got about a $6.78 move. So what are you looking at? You're looking at what? Yeah, about a $7.20 move priced in by the close of action tomorrow, okay? So about a $7 move priced in for Apple earnings tonight after the bell. Apple accelerating low with this market, driving the market. It's a self-fulfilling prophecy, man. Apple trades lower, the market trades lower because Apple has such an outsized impact. It's such a large market cap company. You're at 165 right now. And keep your eye on where we are because longer term, this bright blue line, you can see. We've either come back to test it and we can accelerate higher, and this is from the highs of last year, or we break below this, man. And boy, these are, 30 points is nothing to Apple, let alone you've had a couple $40 sells in both directions. Look at these moves, right? Just in the last, since we've been hiking, you have one move down, one move up, one move down, one move up, 4 separate moves, each of them representing like 40 points on Apple. So right at a critical area. Now we get to Qualcomm. They have their numbers today. They're pushing recent lows back to where it was basically in July of 2020. Jumping over to those numbers, they matter. Okay, they matter beyond Apple, but they matter for Apple as well. Largest maker of smartphone processors. Okay, revenue will be $8.1 to $8.9 billion in the third quarter. Market was looking for 9.25. Now, the outlook shows the challenge. The company now expects the total market for phones to shrink by a percentage range in the high single digits this year. That's talking about the phone market shrinking by 8 to 9%. Now, Apple's its own universe. For sure, okay? But inventory reductions by customers will likely continue for 2 more quarters, they said. Demand in China has not returned to levels that Qualcomm and others had expected. They make most of their money from handsets, okay? Now, it sells the modem chips that connect Apple's iPhone to high-speed data networks, and an additional chunk of Qualcomm's profits come from licensing. The company's modem-only customer, which is how they refer to Apple, is ordering fewer parts after stocking up earlier in the year. Their CFO said, hey, that's not a comment about demand for the iPhone, though. We find out today, folks. Stay tuned. We got Basil Chapman coming up next, folks. And if you missed his webinar last night, check it out on the front page of TFNN. We got the archive up there. Have a great